And we're live. Phil Tarrant, Tom Panos, Real Estate Exposed. Tom, why have you got a banner? It makes me nervous. I've just jumped on here thinking we'll have a nice, easy conversation, and I see a banner. Is there a bloodbath coming? You're trying to set me up or something or other, mate, to make some stupid commentary about property markets.
No, I'm not. It's just that this morning, it's Thursday, the 15th of September. I want to let you know that I've had two people this morning use the same words. One asked me, one told me. One said, Tom, you reckon there's a bloodbath coming? And the second one was a guy who works in property and finance for a very big Israeli company in the city. He said to me, Tom, there's a bloodbath coming. So I thought I'd talk about it, Phil, because both people made reference to overnight, over the last 24 hours, the USA has clearly shown that inflation can't be taken under control. They were absolutely spooked at the rate of inflation. But what is concerning, Phil, is that it appears these measures of interest rate cuts have not done significantly too much to tame inflation in the US. And they are meeting again next week. They have their like we have the first Tuesday every month in the US. Next week is when they have their monthly meeting, and they're tipping that they're going to have their largest rate rise that they've ever had, as one of the tools they're trying to do to get on top of this inflation. So these both people, are saying, does this mean that if America is the case study on inflation and they haven't been able to get it under control, that these interest rate rises that the Reserve Bank has been putting in Australia mean that they're not going to get it under control? And does that mean that we're entering a period of prolonged rate rises and measures to actually get on top of inflation, Phil? That's what this is all about.
Yeah, it's concerning because a lot of the mail coming out of the States a couple of months ago was, a tempering of interest rates into the future. And I've read some of the same reports, Tom. The Federal Reserve looking to hike up rates by another percentage point, and there's no real sense for when that might slow down. My view, and we've been chatting about it on this particular show, Tom, was that the RBA would be making rate rises, quite aggressive rate rises over a period of 6 months, running up until November. I still think there'll be at least a 50 basis point rise next time the Reserve Bank meets at the start of next month in October. You'll see another 50 probably in November. We've spoken about this, Tom, with view to curb spending, and then they'll apply the brakes. Now, a lot of people were talking about, Tom, that interest rates may start coming down at the back end of 2024 calendar year. I don't think that now is going to happen. I think the Reserve Bank's come out just this week pretty much saying that, the likelihood of that happening is not the case. So what we need to assume and what we need to accept, Tom, is that we are in a rising rate environment, and it will remain that way for a period of time until there will be a period of equalization, so we can let them sit and allow the economy to breathe to see whether or not any more drastic action is taken or the appropriate measures are enough. What does that mean for property markets is the key question, Tom. And now a bloodbath is quite an aggressive and visual term of horrific outcomes. Now, will that happen inside of the Australian property market? And what does a bloodbath look like? Tom, I don't know if you listened to it, but I had a really good conversation last week, and everyone go and tune into it on smart property investment. It was with Brian Hartzer, who was the former chief executive of Westpac Bank, one of Australia's top bankers. We had a really good conversation around this rising rate environment, and I highly encourage everyone to go and listen to that because he gives a very informed and considered view as someone that used to lead one of the major banks. So I also asked him, Tom, how the banks got it so wrong at the start of the COVID pandemic when they were all forecasting 25 to 30% drops in property prices. I'm not going to tell you what he said. You can go and tune into it to hear from it. But I would say that 25 to 30% drop in property would be a bloodbath for Australian property owners. Do we need to define the term bloodbath, Tom, as part of this conversation?
Well, Well, that's a very good question. What is a bloodbath? What is the definition of a bloodbath? Metaphorically, it means, bombs are killing people and there's blood pouring on the streets. From a real estate perspective, it means distress selling. It means people are selling out of desperation and often selling for lower than what they paid for. That's what it means. But Phil, there was an article in yesterday's, I think it's in yesterday's Sydney Morning Herald, and they're using various data sources. There are suburbs now that are looking very close to getting back and losing all the gains they picked up during COVID. The article, talked about if we continue at this rate, that it shows, and some of the suburbs that were talked about in this article were Redfern and Darlinghurst as being two suburbs that look like they're about to relinquish all the gains that they had. That's what a bloodbath, I think, means. But Phil, it is like if it were to happen, we are a little bit in. So I've been in real estate for 35 years, and I can't recall there's ever been a period where there has been a price correction of more than 20%. Right. So if it stands to reason in a lot of areas, Phil, at the moment, there have been corrections of 15 to 20. So what we're talking about, a bloodbath would mean is adding another 10, 15% on already the drops that we've got, which means that you're going to end up having drops of 35% or even maybe 40%. I just find it difficult to actually process and think that there's a relatively high likelihood of that happening, Phil, because right now, to this day, Phil, me and my auctioneer colleagues and the real estate community I service, there's just no distress selling. So can you go from zero distress selling to a bloodbath in a short period of time? Some people are saying you can. I don't think you can.
Yeah, it's very sensationalist, Tom, and we're not in the business of peddling sensationalist views. I like to think we're very considered in the way we see it. And you've got a long tenure in real estate in many ways, Tom, the custodian of the commentary, the analysis, and the color that comes into real estate investing, whether it's owner occupiers or property investors, and the very important role that the real estate profession plays in that. I think if you go and look at the data, and I'm a student of history, and we've spoken about this beforehand, I don't think you can find a recent period in Australian real estate where you've had price drops which weren't regained within a 5-year period. Now, if you look to history, and if you look to the economics of how property has performed, I think you're going to be challenged to go and find that. So if property were to come back to that degree, based on history, it should come back to where it was. And it may take a little time to get there, but it's not going to be permanently reset at a new price point. Now, to the inflationary issue, Tom, a lot of that is COVID impacted in that. And this is the reason why you're not seeing distress selling, because Australian family balance sheets are the strongest that they've ever been before. I think Australians are further ahead on their mortgages. Those Australians with mortgages, I think a third of all Australians have a mortgage. They're so far ahead on their mortgage repayments, or they've got money tucked away in redraw offset facilities, that they're not distressed yet. They don't need to sell. They've still got the family treasury is still in pretty good order. That there again is propagating increased inflation, because the impact of inflation at higher prices isn't yet really hitting people's hip pockets. They've still got the capacity to spend because a lot of them still have savings. This will run out in time. It's a really fine balance for the Reserve Bank to get this right, to actually curb the spending. Go back to it, listen to this podcast. I think Brian Hartzer spells that out really well, because it doesn't make a lot of sense for a lot of people saying, things are getting more expensive. Why are you pushing up my interest rates? You're making it hard. Well, the idea is that that's most people's biggest financial commitment. When that starts hurting to pay their mortgages, they stop spending on other stuff, TVs, holidays, fancy food. They start looking towards the family budget. We're not yet there. So hence the reason why you're going to see continued interest rate rises. But to the point around a property bloodbath, Tom, will prices come back? Well, they already have done. You've called it. You've said a couple of weeks ago that we're probably not far off the bottom. You're calling sort of about, 5 o'clock, nearing 6 o'clock on the property clock. Now, is that going to be pulled out longer? I'm not too sure. It's been a very lackluster start to the spring selling season. I'd like your feedback on that, Tom. because we've telegraphed this saying it might be the spring selling season that doesn't actually happen. What are you seeing so far?
Stock levels are a lot lower than what we would have expected in spring. They're higher than winter, but they're lower than spring on spring. So you can notice it yourself in the work, but you also can just look at reports. Louis Christopher, SQM, talked about it this week, and Tim Lawless has spoken about it being low volume spring, and maybe that's why last Saturday my auctions were 8 out of 12. 8 out of 12 is a long way from bloodbath markets in real estate. Bloodbath markets in real estate is 1 out of 12, right? But Phil, their stock levels are lower, and fundamentally, real estate agents are telling me when they're ringing up their pipeline of sellers are saying this to them: listen, the market's not great, and because we don't have to sell, we've just decided we'll just sit tight for now. Now, the worry that you have, Phil, and this is not a worry about property prices, this is a worry for the real estate industry and mortgage brokers. If you get vendors that turn around and say, listen, the market's not great, we'll sit tight, we'll just wait, there's no need to sell. You've also got buyers that are saying the same thing. The market's not great, we think it hasn't bottomed yet, we'll just hold off as well. So that's a bad problem for real estate industry, because what it means is turnover comes to a bit of a halt, right? Because people do not feel comfortable transacting. That's not a great market for real estate agents. Agents live off turnover. The advantage that brokers have, that they also get punished is, but the advantage that brokers have is you've got the ability to focus on refinancing when there is no turnover happening. You can change your strategy and look at refinancing existing clients. You can't do that in real estate, Phil.
And it's a funny thing for real estate agents. They're not largely impacted too much by price fluctuations. No. They're impacted by turnover, and they're in the business of turnover. Now, Tom, I'm much like yourself. I think I'm pretty dialed in with the real estate professional. I've been chatting with some buyers agents, and I know Luke Moroney's always tuning into this. I don't know if he's tuning in now and whether he can give some commentary on this. But some of the buyers agents I'm talking to are telling me they've 30-40% drop in client engagements, as in there is that less people transacting in property on the investment side, at the buyer side, purely because of restrictions on serviceability, that they can't get the cash anymore from the banks based on these rising rates to buy the property that they want to buy. Now, there's been a wholesale shift to where a lot of investors are actually operating now, and I think there's a flight to Perth. Prices there nationwide are still undervalued if you look like for like with other capital cities. I've had some really good chats around that. Damien Collins, for example, Momentum Wealth, who is quite big out there in Western Australia. So that's changing the framework for property investors, but volumes are down for buyers agents as well. Now, the bloodbath might not be a price. You don't look at a bloodbath through the lens of prices for Australian properties. I imagine the other lens to look through a bloodbath is how are real estate professionals going to keep the lights on, mate, if there is an activity in the marketplace? That's the big question mark for me.
Yeah. So Phil, that is, because my life is far more impacted by the health of the real estate industry being agents than anything else. That does concern me as well. I can't help, Phil, but think to myself now, I'm putting my neck on the line here. I got this funny feeling, Phil, that late November, we may get some positive commentary coming through. And I only say it because I just know that the Reserve Bank and the government are going to want people to spend money in retail, right?
Yep.
The retailers want to have a decent Christmas, right? So I just feel there's a possibility they might put the pause button and not let Australians go into Christmas scared to go to Westfield and buy things.
Yeah, and it's sentiment driven. But Property Australia is absolutely sentiment driven, and the sentiment is what's between the ears of Australian property owners, Australian property buyers, Australian property sellers now. I can't see the RBA putting another interest rate rise in December, and I think by memory they have a break in January. They don't meet in January, so the next time they meet will be February. So back to the point, I think you're going to get 2 interest rate rises. in October, November, nothing in December. And then that will be the inflection point to start a mindset shift for Australians. If they are concerned about their family treasury, their family budgets going into Christmas, it will curb spending. I think they'll want to accelerate spending through that period of time because it's good for retailers and it's good for Australian business and the Australian economy. And it's great for workers. There's more hours for them, particularly on the casual basis. So this is the fine balance, Tom, like that sit in the seat of the Reserve Bank of Australia, and you made the point 6 months ago around how upset a lot of Australians were around these sort of promises that the RBA made around not raising rates. I don't even think they saw what was coming. And the information they're basing their assessments on is very different environment from what it is right now. The challenge is, or the dichotomy is they want to curb spending, right, by putting up rates, but then they want to encourage spending during the Christmas period. So mate, imagine sitting in that seat and around those boardrooms trying to balance all these different factors, macro and micro factors, which will shape the healthy Australian economy and property prices where most people hold their wealth. It's not a job I'd want, mate.
No, it's a difficult job. Phil, I've been mindful of time because of a commitment that I've got to get to. I'd love to get everyone that's watching or listening to this to go off and listen to that Smart Property Investment podcast conversation that you had. Maybe the best way to do it is to Google what's the fastest way you reckon?
Just go to if you go to smartpropertyinvestment.com.au, click on podcasts, and you'll see a photo of Brian Hartzer there, ex-CEO of Westpac Bank. Just click on it there, or if you're on any of the Apple feeds, just go to Smart Property Investment podcast and you'll find it there. Really easy. It's really good, and I think as a way as your own education to actually help have those conversations with your clients, it'll give you some tools to be able to have those chats.
Okay, so team, thanks again for tuning in. We'll continue this conversation every Thursday. Phil, good to see you. Enjoy your day, and to all our viewers, signing off. Have a great weekend. Spring's here.